Hey, folks, welcome to InTheMoneyStocks.com's live trading action video. Let's get into the action today, and what I want to talk a little bit about are the financials. And we're looking here at the XLF, which is the ETF that tracks the S&P Financial Index, essentially. And what you're seeing is that the markets, or the financials, have had a pretty substantial run with the market, and ultimately have stalled and consolidated, and then tried to break out on Friday. However, notice how you opened on Friday above the previous pivot high, but could not hold it and sold back below. Even though you have the bullish consolidation here, this tells me that the chart may in fact be unable to break out, and in fact could be a failed breakout, resulting in further downside. Now, there's a couple other things that are telling me that could be the case, which I want to unveil to you right now. Number one, zoom out on the chart, and if you zoom out on the chart and you take this pivot high going literally back to 2013, connect the highs, look at what you get right here. And look at all this beautiful little pivot top area where the chart pulled back pretty substantially off of each hit. But look at what happened right here. You hit it, you pierced it, you pulled back. Then you gapped up, hit it again, and still pulled back. So there's multiple signals here that are emerging that are telling us that the XLF may be in some tough waters here and looking at a short-term top, maybe even a longer-term top. Longer-term top, I'm less hesitant to go out on a limb and state because obviously the charts will tell us over time if that's the case. Short-term is pretty much more obvious here in terms of the trend line, in terms of the failed breakout here, the gap up, the pullback below the pivot high right here. The other situation that I think is worth noting is that obviously financials do better when interest rates are going up, right? Because when they can charge more for a loan, they're going to make more money. And if you look at the TBT, which is the 20-year, basically to follow rates here, just follow the chart. So if the chart is going up, rates are going up. If the chart's going down, rates are falling. And in this situation, you can see on Friday we saw a little bit of a decline, but what I'm noticing more and more is that the chart has now moved below the 20 moving average, the 50 MA, and it's beginning to kind of fade here, and there's not much support in this lower range. So really you could see the TBT coming all the way down here, which would mean rates are falling more and more, and we're talking about the 10-year, 20-year, 30-year, etc. But ultimately, if this starts to break down lower, that's going to be a negative for the banks as well, and that has to be something that's taken into account, which almost confirms, if not definitely confirms, the chart of the XLF we were just looking at. So again, just a couple kind of the 2 cents on what we're looking at here on the financials and what I'm looking at in the future. But again, ultimately the charts are telling us here on just the financials that we could be in for some tough waters on stocks like Goldman Sachs, JP Morgan, Bank of America, and Wells Fargo, and the rest of the financial sector. Take an eye and keep an eye on this going into the coming weeks, guys, and look for the pullback to begin. Take care.